Hello and welcome into the KE Report. Chad and Corey here, getting an update from Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, we are here at the New Orleans Investment Conference live on site, and always like to just get people's takeaway from the conference and just what do you think the sentiment is like here with investors you're talking to and other newsletter writers, other companies that are presenting. What's the vibe like here at the New Orleans Investment Conference?
The vibe has been really positive, right? This is a gold crowd, a historically conservative crowd. I think they're emboldened by the Trump win. They're feeling a little giddy about that. They're excited that, gold has hit multiple records this year. Everybody's wondering when the gold stocks are going to catch up, but that's been the question for the past, 6 months to a year, right? There's nothing new there. Outside of that, I think we're excited about maybe the return to a little bit of economic growth and certainly excited about, where the commodity prices are and where they could go in sort of America first, bringing manufacturing back type thing, right? So everything is awesome, except it isn't, right? Because it's the New Orleans conference. I mean, the sentiment is okay, the commodity prices are okay, but there's still the specter of the debt hitting 36 trillion. There's still the doom and gloom and Dave Collum on stage, et cetera, right? So we have to deal with some of this stuff eventually, but in the meantime, people are making money.
Yeah, we've been hearing some of the same narratives from this conference, I think, for the last decade that I've been coming to, right? So there is always that underlying fear, but people are generally optimistic. They're kind of in this little euphoric range, being like, hey, our guy got in, now let's see what happens. Let's just recap your talk here, though. Focus more on battery metals, bigger picture on battery metals, too. It was a bit of a different talk than most people gave at this conference. So just break down what you had to say, please.
Well, first of all, you're either a contrarian or a victim, as Mr. Rowe likes to say, right? And so I figured that everyone would be talking about gold, considering gold's at $2,600, $2,700, and lithium just, if I may cuss, ate shit from $80,000 a ton to $10,000 a ton. And so I decided to talk about battery metals, but I talked about it through the frame or the lens of battery passports, which the European Union is going to be requiring starting in 2027. So you scan a QR code on the battery, just like you look at this window sticker right now. That's the easiest way to think about it. You look at the window sticker, you see what the miles per gallon are, how much it's going to cost you in fuel per year, et cetera. That's what the battery passport's going to have, but it's going to make you keep track of the source of the materials, the inputs, how much was recycled, the carbon footprint that's associated with those metals, et cetera. And really not just the EU, but Japan is starting to do this in 2025 for batteries, and the Inflation Reduction Act in the US made you keep track of the source of the battery minerals to get the tax credit that was offered as part of that. So that was my launch pad for that. And really that industry is interesting because, miners are historically and notoriously and even concurrently bad at keeping records and keeping track of things. So all that data has got to be digitized, brought into the 21st century, put into the cloud, put into the blockchain to make it transparent, digital, and tracked. And there's only a couple of companies doing that. So that was sort of the launch pad for the talk. I talked about various companies that are involved in the tracking of that data and other companies that are taking a lead. Happy to talk about either of those. And then I talked about some different new leaching technologies that are being implemented to make mining more efficient, because it's a very inefficient process currently. So happy to drill down on any of that stuff if you want.
Yeah, I think it's interesting to maybe put a little more color around some of the companies that are tracking this data, but also what does this do first and foremost with the importance of jurisdiction, where companies are operating, because there's conflict jurisdictions, there's other jurisdictions that should get a premium. To that affect investors' decisions about where they invest?
I mean, jurisdiction is always important. It's not on the top of my list, but it's on the list of due diligence things that I look at. I'll just go right to the company, right? The company's called Mine Hub, and they've already signed a couple of contracts, so we can look at the jurisdictions, right? They signed with Codelco, for example, and so this is one of the largest copper producing companies in the world. The other thing that's interesting, you mentioned jurisdiction, is they signed deals with a couple of Chinese smelters, right? So we're talking about, even China getting in the game of cleaning up its act, right? Because if it's going to sell batteries or produce batteries or inputs for batteries for Panasonic or LG or any of these other companies, the cells are ultimately going to end up in an electric vehicle, then they're going to have to track that process as well if they want to be able to sell the batteries. So I'm not sure it's going to make you change your opinion or make you invest in different jurisdictions, but it's going to make you look at companies, or it should make you look at companies who are at least willing to invest in this and bring this into their fold, right? And I can give you an example if you want, but if I'm looking at a company with its head in the sand, has no interest in moving into the 21st century, just wants to stay antiquated and old, versus a company who's, leveraging these new technologies to get into the 21st century, then, that gives them an edge, right? We talk about value creation a lot, right? That's one of those dumb buzzwords that you hear all the time. Like, how are you going to unlock the value? Well, this is one of the ways that you can unlock the value of something that's might otherwise be sitting there and nothing's changed, right? A way to do something different. So happy to do an example if you want.
Any chance that this lowers the cost of capital for the companies that do embrace this early on? Maybe offtake agreements, maybe just other bigger tech companies, whatever, that they actually provide some capital to the bottom line of these companies?
Yeah, 100%. And I'll make the leap to an example, right? So I talked about the tracking of the mineral, the tracking of the emissions, but I also mentioned new technologies that are being used to leach, right? To extract minerals from ore that's typically been tougher to get it out of, right? And metallurgy is key. Recovery is key. The question was, does it lower the cost of capital? And the answer is it already is. And the example is Aldebaran, right? Who is embracing the Newton technology, has been doing the testing with Rio Tinto and Newton for the past couple of years. And just earlier this month, Newton came in and signed an option deal with them, non-dilutive, right? So yes, it's lowering the cost of capital. They didn't have to raise, they didn't have to dilute. They've got, an arm of one of the biggest mining companies in the world coming in to provide capital to them just to see how this technology applies to their deposit, which is the Altar deposit in Argentina. So yeah, by doing something different, they were able to attract a different type of capital that was non-dilutive to their shareholders, and the market responded to that. Aldebaran was a stock that's $1.20 just before the deal was announced, and it ran to over $2 in the past couple of weeks when the deal was announced. So not just lowering the cost of capital, but I think investors starting to take notice, and that's sort of what my talk was about, not providing investment advice, but saying, hey, look at this and start looking at this because it's important.
Yeah, we haven't seen a lot of new technology in the mining space for a while. So two different things here, tracking the supply chain, but also changes to the leaching. In the case of Aldebaran, I know their sister company, Regulus, using the same kind of leaching. They're also Arizona Sonora and looking at that, the Rio Tinto Newton technology. But you brought up the Glencore's got some different things. So there's even some other companies. So maybe dive in even a little further to how these technologies are going to not just help on ESG, but also help on efficiency.
Yeah, so Glencore's announcement was also just before this conference, right? This is the Lomos Bias mine. It's coming to the end of its life, and so they're looking for a way to extend the mine life. And this is another theme that we hear about all the time, right? All these mines are coming to the end of their life. Escondida's been around for however many years. Rick Rule's still on stage and rattled off the old mines and how long they've been around, right? And we hear that these companies got to replace their reserves. And again, this is another way you can do it. So in Glencore's case, they signed I don't know if it was an LOI or a JV, but they're gonna investigate the CEIBO technology. It's CEIBO. That's been invested in by BHP and Khosla Ventures. And if you've been around the block a little bit, you'll know that Khosla is one of the big Bay Area, Silicon Valley VC arms. It was one of the big internet VC companies, right? Vinod Khosla. It was also big in funding the early implementation of the first round of clean tech in the 2000s, right? So they signed a deal in the past week with CEIBO to investigate if this technology could be viable, right? And the reason I'm interested, for my greedy purpose and also for your listeners, is that there's a couple of other companies that have invested in CEIBO. It's not just BHP and Khosla. There's a company called Cotec, COTEC, which is listed on the TSXV exchange, right? And they participated in the last round of the CEIBO investment alongside BHP. So that's a way to get invested in this technology that you otherwise wouldn't be able to be invested in. And those are sort of the deals I look at. One more thing, Cotec isn't just about the leaching. They're sort of, they invest in different technologies, right? So they look at all these different things that are happening and they take pieces of them. So sort of not a prospect generator approach, but a way to get multiple shots on goal, I guess, for your Canadian listeners.
How much can these technologies change the game for copper? We keep on hearing about the copper shortages that we're going to experience. Take any report, it could be as early as next year. But with technology advancements, extending of mine lives, even being able to mine lower grade ore, or even on the back end of that, even recycling maybe becoming more prevalent, how much does that change the overall copper outlook for you?
I mean, I don't think it changes it drastically. I think you still need to find new copper mines. You still need to bring new mines into production, but it's going to augment it a little bit. I just mentioned the CEIBO, right, and Glencore looking to extend the life of their thing. You're talking about copper. This is primarily applied to copper, right, to sulfide ores, refractory ores, things like that. So, I mean, is it going to move the needle in terms of we're not going to have to find another Escondida, or we're not going to do this? I'm not sure it's going to move the needle that much. But when you're talking about the global copper market, it's such a huge thing. If you look at total assets under management or TAD, right, total or TAM, total addressable market, that it's going to move the needle enough to be a profitable theme for investors, right? And so that's sort of what I'm interested in, right? I mean, I'm not out to save the world, or I'm not out to change the copper production, supply curve over the next 10 years. I'm out to make myself and investors money, right? And so if that can happen with these technologies, which I think it will, I think you'll see them applied across the board. And people smarter than me and that have been doing this longer than me, specifically the companies that are investing, I think see the writing on the wall, right? I mean, Rio Tinto and BHP and Glencore know a thing or two about mining and where it's going, right? So I guess last thing I would say is just on the exchanges, right? We haven't really mentioned them yet, but I think this is going to become a requirement. So the LME is going to require next year the aluminum producers to provide emissions data. And then, as I said on stage, I think in the future you see different tiers of metals contracts, right? So it doesn't really directly answer your question, but I think it gives you a guidepost for how the future is going to play out in terms of battery metals and how they're going to be tracked and how they're going to be sourced.
Well, let's maybe pivot from copper to uranium, because still an energy metal, but there's also been a lot of new technology ideas around small modular reactors. We didn't really get into uranium last time, Nick, but since we've talked, there has been major tech companies like the Amazons, Microsoft, Google, Alphabet getting into nuclear as a way to fund AI data centers. You've got news that Kazakhstan is going to supply more to China, but less to the West. Cameco is going to get less out of their JV, but a lot is going to China. You've seen Japanese reactors restarting faster than people expected. There's a lot of tailwinds behind the uranium sector, and the small modular reactors kind of fall in that new tech area of the sector. How are you looking at the health of the uranium sector at present?
I've always said that uranium's in a long-term bull market, and you'll see ebbs and flows. So, all the fundamentals continue to line up for nuclear, and I'm quite proud, honestly, to say that I've been pounding the table for so long on it. And I see that, it's finally up on CNBC, and you can't have AI without it, and you can't have a data center without it. Well, it is what it always was, right? I mean, it was always going to come back to uranium. You can't produce the baseload power without it. And now the fundamentals are shaping up, again, just as they always were. Let's talk about the technicals, and let's talk about the past year of trading, because you had a big run up in uranium, which happened. It overshot. I'm talking about the spot price now. Come back down to 80, and it's digested its meal there, right? You got to consolidate before you can move higher, and it's done that pretty well around $80 a pound. And so I think 2025 looks much better for uranium than 2024. And I guess I would point back to where we started this conversation, right? With the new administration coming in, the new America First agenda, or whatever you want to call it, and really being unabashed about things that are good for the country, i.e. energy production, right? So I think it's shaping up well for uranium here in the next 6 to 12 months.
So what's the best investment opportunity then? Is it uranium miners? Is it nuclear companies producing the energy? Is it simply the utility companies supplying the energy? Where do you see the best opportunities for investors that like this uranium or nuclear bull market narrative?
You should know my answer by now. So I started with the ETF. I got a real large base in URNJ. And then you expand from there. I like the liquid mid-tier names, really big into Denison, really big into energy fuels. I think they allow you to trade in and out. The subscriber just asked me this question on the exhibit hall floor. And some of these juniors are like Hotel California, right? You can get into them, but it's really hard to get out sometimes. And so I don't have a problem tapping the button to get in and out of things like Denison and energy fuels. And then, I'll give you an individual name and a bit of a story. So this is a structure game. This is a people game. And I was invested in a stock a couple of years ago called URZ Energy. That's a Higgs brothers production, Dennis and Darcy Higgs. And they did this the first time in the first cycle, 2003 to 2006, they founded URZ. It was called Uriners then. They ended up selling that to Energy Fuels, did really well, right? Hundreds of millions of dollars listed on the big board, did really well. Put together the team in the 20 teens, URZ Energy was called then, found an asset in South Dakota, ended up selling that to a company called Azarga. And Azarga got taken out by Energy Fuels. So I haven't done all the math, but it's well over a 10 bagger for us at this point, from financing URZ at 10 cents to then financing Azarga at 30 cents to then getting taken out for shares by Energy Fuels. And I'm pretty sure Energy Fuels is $5, $6, $7 on the big board now, right? So I say all that to say URZ3 is now listed on the TSXV. They just raised the money a couple of months ago. We participated in that round, and they don't even have an asset, right? They're going to go out and find one, which is what they did the last time around. So, I tier my approach. I have a base in the big equities, and then I take shots that, I think the odds are in my favor. That's really hard when you're dealing with junior mining companies, but once you put in the time, and this is, plugging myself now, you've been around the block a little bit, and you know where the deals are coming from, you're able to source and vet those deals, and well, that's kind of what I do. And then I sell that information, right, in the form of a subscription.
There you go, folks. You should check out Nick's writing where he dives deeper into these companies and the uranium sector and the copper sector. But I'd be remiss if we're at the New Orleans Investment Conference so we didn't talk about precious metals. Let's dig into gold, silver, the equities. What are some takeaways you got from here or ideas for people interested in the precious metals sector?
So I gave a little gold talk, Chad, which you came to the other morning, and I guess I'll just regurgitate it. The correlations are out the window, right? So we know what the historical correlations are. Should be inverse to the dollar, should be inverse to real yields, and yet at moments in 2024 they were correlating together, and in moments in 2024 they were not correlating together. And in recent days and weeks, the correlations have broken down. So the dollar and gold were trading together. The dollar's been strong, going up 105, 106, 107, and gold was stepping up with it. Gold sort of decoupled here the second, third week of November. On the chart, maybe got a little scary because people were used to it going up every day. But, it flashed down to 25.30, which is where I think technical support is. I think it's going to consolidate around there, right? Things don't go to the sky every day. And 25.30 is a really good price. So I think you get sideways for the next 3 to 6 months in the $2,600 range. It's a great price for gold. It's a great price for gold miners as well. There's nothing to complain about there. And then I think you just got to wait for the new administration to come in, right? So we just voted in Trump. He's America first. He's apparently going to cut $2 trillion from the budget. He's got memes in the form of Elon Musk and Dogecoin out there going around. But it's a lot of rhetoric and it's a lot of promotion, right? Because all you have to do is look back to 2016 to 2020 and see that the M2 money supply was increased, that Mr. Trump signed the checks, that Mr. Trump, basically didn't do anything that he's saying he's going to do now. And so history rhymes or repeats, and I would expect more of the same from the U.S. government. I think it's easy to talk a big game, and people might be buying it now. I think it's different to get in there and cut trillions from the Pentagon's budget. So we'll see. And the other thing I'd say is, when Trump took office in 2016, we had a strong dollar then too, 106, 107-ish, and then he got into office, and then the dollar went down for the first year of his administration, right? So I would expect more of the same this time. I think you're in a bullish environment for gold. I don't pay as much attention to silver.
What about the gold stocks, though? They've lost a lot of momentum in the last month, all kicking off with Q3 earnings season. Yes, they did really well leading up to that earnings season, but it really seems like attention, well, it was on gold stocks for, say, a 6 to 8 month period. It's not anymore. So is this a pause? Is this a long-term something else?
Yeah, it's a really tough question, right? And it was presented on the mining share panel here by Rick Rule. And, my answer was, unfortunately, you need some of this buoyancy to come out of other sectors, right? I own Bitcoin. I own some AI stocks, and it's tough to make a case, even to people at this conference, to own gold equities when, the S&P hit 60 record all-time highs this year, right? And so I think you need some buoyancy to come out of that market. And I would argue that we're starting to see that, right? I'm a sector guy, I'm a macro guy. And in the past couple of months, you haven't seen the communication / IT sectors leading. You've seen more from the banks, as Trump comes into office. You've seen more energy. Yeah, but that's not an S&P sector. But absolutely, it's going up, and there's definitely money going into it. But even energy has been coming up. And so what I'm saying is, the Magnificent Seven isn't a thing anymore, is I guess what I'm saying. The S&P is being driven by other things. And unfortunately, you might need some sort of a crash or 20% sort of drawdown to get people to really look at these PE valuations and how these AI stocks are getting valued. And then there will be some, as there always is, some reverberation or some backlash into the hard assets. And I think that's coming. You'll ask when, and I'll say, I wouldn't be here with you if I knew.
Do you think that with a lot of the market jubilation on the Trump victory, that maybe you just brought up valuations, they don't matter till they matter. Do you think that it's possible that we do see a corrective move in the markets to digest the move that it's had for really, you could argue, a dozen years now, but also that maybe some of these policies aren't going to be enacted as quickly as people think? Deregulation, the tax cuts for businesses. If you're a multinational company, these tariffs may boomerang back. The whole idea of tariffs and what does that do for inflation? And if we see more inflation, how does the Fed respond? Do you think some of this maybe has gotten a little over its skis, or do you think it's warranted for the markets to be so bullish?
I'm tempted to say it's over its skis, but I would have been tempted to say that 2 years ago as well. And it keeps going up, right? And so I guess I would look at the economy, the straight up GDP and the jobs numbers, and they seem to be okay. And the reason I point to the jobs is because, market dynamics have really shifted in the past 10 or 20 years as well. You get your paycheck, X percent of that just goes right into an index fund, right? And this is going to keep the thing going up. So unless you get a real contraction in employment, a real contraction in wages, which by the way are now starting to expand, and you've got that money machine that literally keeps funding these index funds, these passive funds that keep buying the biggest companies in the S&P. So it's self-fulfilling in that way. And again, valuations matter until they don't. So that's a crystal ball question that I'm not really comfortable answering and I probably can't answer. But on the topic of valuations, I forget sometimes, just like, think about the market caps. I was talking to a company in here that's got a past producing gold mine, a permit to turn it on if they want, in Mount Todd, right? And they're trading with like a 40 million market cap or something like that. And I had to do a double take because I was like, what companies do I know that have a market cap higher than this? And I was like, I know some absolutely crap companies that have a market cap that's much bigger than this. And so, valuations, like you say, don't matter until they do. But that's why people come to this conference, right? Because that was Vista Gold. I hadn't really spent any time with them, never looked at it, didn't know the story, and I found that while I was here. So anyway, that wasn't really a good answer to your question because I don't have one, but valuations I think are going to come to matter at some point.
Hey, it's a sector full of penny stocks, right? That's the problem. So you can go around and say, look at how cheap everything is. Look at the disconnect. But any stocks that you've noticed or any certain work programs, narratives that are actually capturing the attention of investors?
I mean, new discoveries are still catching the attention of investors. Snowline's doing okay. Sitka's putting out visible gold pictures and getting a response on that. So I think new discoveries still matter. I think that's sort of the theme. I haven't seen a lot of movement on increasing resources, upgrading resources, expanding resources. Haven't seen a lot of movement on that. So, drill hole plays are exciting. I'll give you another one. Kingsman Resources is here. It's a company we financed. We raised them $1 million, almost all ourselves. And it's a drill hole play. My air quotes are up right now, but it's not because it's a past producing mine that's been consolidated for the first time. And so they're likely going to hit mineralization. Things like that, I think, are going to resonate. And that did, I know, because when I invited people to participate in the private placement, they got a much higher response than other deals I put out in the past couple of months, right? And so I think investors are getting better at separating the wheat from the chaff. I'd like to think I'm getting better at it as well. Like, I don't get side-eyed in this exhibit hall anymore. Like, I'm on a mission, I know where I'm going, and I don't really got to eat the sugary sweets.
Well, I think we'll wrap it up there for today. I think this has been a nice overview of the conference, copper, uranium, and gold. And if you want to see Nick separate the wheat from the chaff, definitely click on the link below this interview. It takes you over to Digest Publishing, where you can see the different offerings that he and his partner Gerardo offer. And they get into the nitty-gritty on the companies, but they also have newsletters focused on the macroeconomics and focused on the big drivers and macro trends. So as always, great having you on the KE Report. Great to catch up live in person at the conference, and looking forward to our next conversation next month.
Thanks, Shad. Thanks, Corey. Appreciate it.